Good evening, everybody. Let's wait for a few minutes for uh, others to join. Okay.
I think they never go. After anything, no sleep, no confidence. No, they don't have to have after that. Nothing what you don't.
Good evening. You're welcome. We'll start in a few minutes. We're waiting for others. Good evening, everybody. Let's quickly get started. So I hope you've been learning, and I hope you've been learning. You're welcome to the third day of today's bootcamp, which today we'll be talking about understanding the analysis in the global financial market. I'm very positive that my colleagues have explained to us what the global financial market is. The second module talks about the currencies and all that. If I'm correct, can you drop a fire emoji in the chat session? If I am correct, can you drop a fire emoji in the chat session? So the first one, the first one on Wednesday, that's great. Okay, I can see Kelly Faith, nice one. Mr. Michael Kevin said yes. Okay, so we just need a fire emoji. We need a fire emoji. Just drop the fire emoji if I'm correct. And we understand the fact that the global financial market involves buying and selling of what? Financial instrument based on the law of what? Based on the law of supply and what? And demand. Okay. So based on the law of supply and demand. Okay, that's great. That's great. Keep it coming. So based on the law of supply and demand. So which means that if there are, so the meaning of supply and demand means that if there are more buyers, if a market has tendency to have more buyers and small sellers, what will happen to the price? If the market has tendency to have more buyers than small sellers, than more sellers, what will happen to the price? The price will what? Will it go up or come down? I want you to write that in the comment section. Will it go up or come down? If there are more buyers than sellers to the market, will it go up or come down? Yes, Chidera Bonaventure said it will go up. That's great. That's great. Does anybody have any other alternating result? Okay, that's great. Okay, so which means that when we have more buyers than sellers, it will become expensive. So when something is expensive, it means that there are more demand than what? Supply. And when there are more supply than demand, what will happen to the price will come down. So basically, these are the things that works in what that affect the global financial market. And I hope we were being told types of financial market that we have. We're being told that we have the who can tell me some of the financial markets some of the financial market, can anyone tell me types of financial market? Can you write down, can you tell us the type of financial market? I'll be waiting for your answer in the comment section. Yes. Now Bashir said we have stocks. Okay, that's great. Currencies, nice one. Yeah, you're correct. Okay, Ms. Bassi says stocks and BTC. BTC is a name of is a name under a financial market. So we can take BTC as what cryptocurrencies. Okay, so who can tell us more? We have a lot. We have a whole lot of them. Crypto, okay, major currencies. There's also like major currency. We have the currencies, yes, spot market. We have the cryptocurrency, bonds, yes. Metal is under commodities. Metal is under commodities. Okay, that's great. It shows that we've been following, and that's a beautiful thing. Now, when you're talking about spot market, which is currencies, right? We have three major types of currencies. Can anyone tell me? Three major currencies. Oh, okay. Welcome, Mr. Ikechukwu. You are welcome. What are the three categories of currencies that we have? But first, I hope you know what the major currencies are, right? I hope you know what the major currencies are. Can someone enlist what the major currencies are for me? Okay, can we call company shares in that position? Yes, company shares is also part of financial market. It's called stock or equity market. Yes, Mr. Bashir said major, minor, and exotic. Okay, so let me correct you. It is major cross, it's not minor. Major cross and exotic. Okay, yeah, Mr. Lavisi said USD, yes. JPY, that's great. So that's great. We have types of currencies. We have the dollar, we have the USD, we have the euros. Yes, that's good, Mr. Macaulay, that's correct. We have the euros. Who can tell me more? AUD is Australian dollar and all that. So you guys are doing well. That's great. So yesterday we talked about the base and quote currencies. I know Mr. would have taught us that. Okay, Chidera Bonaventure, it is not CAD USD, it is called USD CAD. Okay. Yeah, Chef, CAD, you're correct. Those are currencies. Okay. Now major currencies is just when you pair dollar with any of the major currencies. So examples, major currency pairs, examples, we have USD CAD, Euro USD, USD CHF. Okay, so these are examples of the major currencies that we have. Okay, then we also have the cross, right? The cross, they are when you pair two majors outside dollars. Okay, when you pay two major outside dollars, they are called cross currencies. Exotic is when you pay one major and imagine. That's because of our time yesterday's class. I'll just send our YouTube page. My mic is bad. Okay, can anyone hear me? Mr. Bassi, I think is your network. Can anyone hear me? Am I audible? I think it's from your side. Okay, so let's continue. So today we are talking about something entirely different. Okay, we are talking about something entirely different as we proceed. So we are talking about something entirely different. We are talking about understanding analysis in the global financial market. Understanding analysis in the what? Global in the global financial market. Okay, so let's continue. Now, there are three types of market analysis. But before we get started, before we get started, before we get started, what does the word analysis mean? So I am going to allow people to talk. What if they say something is something analysis? What does it mean? Please, if you're in noisy environment, don't unmute your mic. So when you hear the word analysis, what does it mean? Okay, when you hear the word analysis, what does it mean? Hello, hello, can anyone hear me?
Hello, sir. Good evening.
Good evening. So when you hear the word analysis, what does it mean? What comes to your mind?
Yeah, analysis is a situation where you dissect or
Dissect.
let's use that word, dissect a situation, i.e., you understand, look at, let's create a scenario now. Okay, we are in a currency setup now. You look at a USD card, for example, now. You dissect the relationship between the USD, the scenario about, okay, is it going to go up? Is it going to come down? Is it the trend? How for the past 1 month, what has been the situation of USD card in the market? So the analysis is just to dissect and take a position or suggest a solution or provide or interpret what you have been able to observe over a period of time, and then probably you
Okay,
can now take a
that's
position on it.
that's great. That's lovely. That's lovely. Thank you very much for that. Okay, so let's proceed. I've been seeing a lot of answers. Mr. Kelly Faith said detailed examination or structure of something. Um, Nafizi said to analyze. Please, I don't want to hear that. Okay, so it's fact, Indogesi basis is it's fact and figures taken into consideration when you're taking decisions. A breakdown comes to mind. Analysis is used to know the trend and exit and simplify. Okay, so to simplify, okay, now analysis, everything we've said here, we are all correct. Okay, to simplify, to know more, to dissect, to make research. Somebody said probabilities and all that. Yes. So that is what analysis means. It means before, okay, Mr. Victor Sunday says, okay, someone said review, someone said analysis is the process of breaking down complex information and data into smaller parts to examine, interpret, and understand their relationship patterns and meaning. This person must have used ChatGPT. But it's correct though. So now it's correct. Okay, so thank you all for all the definitions. Okay, so let's continue. Before you make a trade, before you place a trade, or before you make your decisions in the market, it's very important for you to make findings, right? It's very important for you to analyze. It's very important for you to know when to do something, when to buy, when to sell. So trading entails you knowing what is going on in the market so that you can decide when to buy or when to sell. Okay. And in trading, there are three types of analysis. There's technical analysis, there's fundamental analysis, and there's sentimental analysis. Okay, we have technical, we have fundamental, and we have sentimental analysis. Okay. Okay, now, so what are we going to look out for? We're going to look at what? Technical what? Analysis. Okay. We're going to look at technical analysis. Okay, so technical analysis, that is what we are going to talk about today. Now, what is technical analysis? Technical analysis is the study of price movement in the market, whereby traders make use of what? Historic chart patterns and indicators to predict the future directions in the market. This is technical analysis. We are going to study, meaning as a trader, we are, as a technical analyst, we are using what has happened in the past to gauge what is happening currently so that we can predict the what? Predict the future. Think of it, some of us that are living in a suburb, in a clustered area. Okay, so some of us are living in a clustered area where we know that there's always traffic every morning, right? You know that if you have an appointment 7 a.m. anywhere, and you know that at that there's a junction at close to your house, the traffic is always very, very massive. What will you do? You will do what? You would have left the home before what? Before time. You would have left ahead of the traffic. So that is what we call analysis. So analysis is technical analysis, is when you know what has happened in the past, you use it to judge your present so you can determine what will happen in the what? In the future. Now, it is graphical representation of the past and present performance of a market, which guide and inform traders about the potential future direction before entering a trade. So most of what we do is we look at what has happened in the past, then we use it to judge what is happening currently and predict what will happen in the what? In the future. Now, what are the benefits of technical analysis? The first one, it helps traders to know the future market direction easily. You will have known that, oh, okay, this is the pattern, or this is the way market used to react when we have more sellers, or this is how market behaves when we have more buyers. Okay, so with this, you'll be able to look at it. Okay, it happened yesterday, it is currently giving sign, then definitely will happen in what? In the future. So the second one says it helps a trader in finding the best entry and exit point, knowing where and when to buy, sell, or exit by studying the past price movement on the chart. It's still the same thing. It helps you out to know the characteristics of price movement in any market, which is what? Trend, retracement, continuation, and what? Reversal. So this is telling us, it says that it is helping us to know price movement, characteristics of price movement. So it is being used by successful traders both in the past and present in making profitable trading decisions. What I want to say is technical analysis has been in time, has been from a long time ago. It's been used by traders in the past and currently also being used. The same thing, and they're still using it now, and they're still going to use it in future. Okay. Okay, now, so what are the characteristics of price movements? The first one is the trend. Now, a trend is a tendency of a price to move in a particular direction over a period. Now, let's look at this word. Tendency for price to move in a particular direction over a what period. So which means that the price has what direction. Then that word, that phrase over a period means that it does not go in one direction for a long time. So that's why Ina said it could be long term or short term. Okay. So success with trading is largely tied to traders' ability to identify trend and position themselves for entry and exit points. Okay. So you first thing is it's very good for you to identify a trend so that you can position yourself for what for entry and exit point. There are three types of trend. We have the uptrend, we have the downtrend, and we have the what? Sideways. Okay. The uptrend, the downtrend, and the sideways. So these are the three types of trend. Now let's talk about the uptrend. Okay, so uptrend is when the general price of direction of the market is upward. Now, I'm going to go to the whiteboard. Yes, sideways is the same as ranging. Yes. Okay, so let me share a whiteboard so I'll be able to explain to us perfectly. Just a minute. Okay, so can you see? Can you see my whiteboard? Can you all see my whiteboard? Can you all see my whiteboard? Okay, so let's get started. Now, please, okay, so I picked a pen. Okay, can you see what I wrote on the board, on the whiteboard? Please don't write on the board, please. Okay, please don't write on the board. I don't want anybody to write on the whiteboard. Okay, so let's get started. I'm going to draw a line. Now, the market is plotted price against time. Okay, it is plotted what? Price against time. And okay, it's plotted price against time. And you can see here on this place, I want to find the right tool. Okay, so price against time. Let's see, annotation tool. Okay, so we have, for example, if we have Euro USD, can you see my screen? If you have Euro USD, so let's say we have what Euro USD, right? So which one will be here? So we are going to have USD is going to be here. Can you all see my whiteboard? We are 29 here and we only have 25. Mr. Ebenezer Dari, please don't. Okay, don't worry. I know what to do. I'll take everybody back to. I will explain. I will take everybody back to the meeting. Okay, so can you see my screen now? I wanted to take us to the whiteboard, but it seems not all of us that are there. So now, I want to explain something here, right? So if you have the Euro USD, the base, the quote is going to be here, right? While the base is going to be here, right? Now, so this is my explanations, okay? This is my explanations for an uptrend. The market does not go or does not move in a straight line, okay? The market does not move in a straight line. If market has moved in a straight line, a lot of people would have made more profit, right? So the market does not move in a straight line. The market moves based on the activities of what? Buyers and sellers, okay? We move based on the activities of what? Buyers and sellers. That is why it is a wavy motion, okay? It is a wavy motion. So it doesn't move in a straight line. It moves based on activities of buyers and sellers. So how do we identify them, or how do you understand when an uptrend is going? Okay, so now the first thing is, in a market or in a trend, we usually have set of buyers. So let's say the buyers bought at a very cheap price. Let's say the first set of buyers bought a particular instrument when it was cheaper. So let's say that they bought when it was 10 naira and the market goes down to 20 naira. Okay, so now let me ask you a question. If you buy a product for 10 naira and the market goes down to 20 naira, what will you do to acquire to get your profit? What will you do to get your profit? You rather sell, am I correct? So let's say if 100,000 people bought at 10 naira and the current price is now 20 naira. I know that out of that 100,000, what do you think will happen? 50,000 we want to sell off their positions. Am I correct? Because they want to feel like, oh, hey, thank God I've made profit. I'm happy now and all that. So in the process of them selling off their position, this 100,000, the price will now what? Will be coming down. Why? Because the numbers of people that bought are what? Are lower. Because a lot of people that bought here are taking out their what? Their position. So the numbers of volume that held the price at 20 naira are getting weaker. So that's why you now see market start coming down. And as market is coming down, let's say it goes down to 8 naira, 10 naira. Let's say it goes down to about 12 naira. So as it is in 12 naira, with showing some signs and analysis, you will see that a whole lot of people we want to buy again. Am I correct? So if you now have the higher number or high numbers of buyers at 12 naira, you will see that they will surpass the last area. Okay, so where was the last place they sold? They sold at 20 naira. So if more people bought at 12 naira, you will see that the price will be higher than what? Than the previous price. So let's say it now goes to about 23 naira, or let's say 25 naira. So at 25 naira, the same scenario start happening again. Price starts coming down, right? So as price starts coming down, Mr. Kingsley, when you bought at 10 naira and it turns to 20 naira, I said a lot of people we want to sell off their position because they made profits. Okay, I didn't say that it will go down. Once they're taking out their position, that is when you're seeing market starts coming down. So it comes down to about, let's say, 24 naira. And again, the same scenario happens. A whole lot of buyers comes in again and buys again. So the market keeps moving in this form. And that is why we used to call it something. We call them a high. So this is a low, because this is a low, then a low we have a high. And after a high, then we have a what? Higher low. So this second set of buyers, that bought at 12 naira, they are called, they make the market what? A higher what? A higher low. And after a higher low, we have a what? A higher high, right? And after a higher high, then we have another what? Higher low, then higher high. Now just think as if you are climbing the stairs. Okay, let's say you are ascending the stairs. You have the higher low, then you have the what? Higher high. So these are some of the characteristics that you will see that will tell you that we are in a what? Is it same as Elliott waves? Elliott wave is just a pattern that reads the trend. Okay, Elliott wave is a pattern that reads the trend. Okay, so you just have the higher high, higher lows, higher high, higher lows, higher high, higher lows. So this scenario will tell you that, oh, okay, we are in a what? We are in an uptrend. Okay, it will tell you that we are in a what? Uptrend. So when you see the market making a highs, a low, higher lows, higher highs, higher lows, higher highs, then have it at the back of your mind that we are in a what? We are in an uptrend. Okay, we are in an uptrend. Okay, so let's continue. Is a downtrend. Now, for a downtrend, market keeps making series of what? A low, a high, a higher low, a lower low, a lower high, lower low, lower high. Okay, so market keeps making that. And when we have a high, a higher low, lower high. So something like this, right? Lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Okay, so this is called what? A downtrend, because this new low, we have series of lows that are lower than the previous low. Okay, and we have series of highs that are lower than the previous high. So you can see that if you want to know that the downtrend, we use this high that has happened in the past and this low that are also happened in the past to judge what is happening currently or what will happen. Because once we have a low that is lower than the previous low and we now have this high that is lower than the previous high, what is this telling us? It's telling us that there are no more strength for buyers in the market, because the buyers are the ones responsible for pushing the price up, while the sellers are the ones responsible for pushing the price down. So a trend, we have a higher low, for a downtrend, we have a lower highs and lower low formation, and for the uptrend, we have the what? Higher highs, higher low formation. Okay, higher high and the higher low formations. So the sideways is just market is not creating a higher high and neither is it creating a lower low. Okay, so it is just moving around a band, which we call it sideways movement. Okay, so it's just moving around the band. It's called sideways movement. So this is just the full picture of the trend. So we have the trend, then we have a range, then we have market forming a lower lows and lower highs, lower lows and lower highs. Okay, so now there are also some things we need to understand. We have after the trend, then we have a retracement. Okay, so I made an example. I used uptrend and for as an example. So how do we identify a retracement? A retracement is in a downtrend. We have level of short buyers in the market. Okay, so in a downtrend, we have level of short buyers in the market, and in an and in a downtrend, we have series of what? Lower highs and lower lows. Now, let me explain something. In an uptrend, if you want the market, if you see the market going series of highs, lower lows, lower highs, lower lows, lower highs, lower lows, and we are having markets forming this level, right? Coming down in an uptrend. So this downward movement in an uptrend is called a what? A retracement. Okay, it's called a retracement. You know, I use examples of people taking out their profit, people buying and taking out their profit. So in that process, while they're taking out their profit, market tends to what? To drop. So this drop movement is not saying that the trend has changed. It's telling you that market is what? Retracing. Some people call it pullback. It's just like when you breathe. You know, when you breathe in, you have to what? break out, right? So retracement is the short short movement in the opposite direction of a trend. Okay, short movement in the opposite direction of a what? Of a trend. So that is just the retracement. Like in a downtrend, you usually have the retracement going up. Okay, so and the retracement, it usually happens in a downtrend. It usually happens when we have a lower low form, then market will go and create is what? A lower high. So when we have a lower low form, market goes to create its lower high, and that formation is called a what? A retracement. Okay, so we have continuations, of course. After market retraces, it continues. Okay, after it retraces, it does what? It continues. So it prevents present favorable entry levels to enter trade into the direction of the prevailing what? Of the prevailing trend. Then we have the total reversal. A total reversal is a total change in the direction of any trading instrument. So all these are just definitions of a trend, explaining to you that the market what does not go in one direction forever. Okay, it does not go in a particular direction forever. As it goes up, it will what? It will calm down. So when we are talking about a reversal for an uptrend, it literally means that a reversal for an uptrend literally means that what? That market has decided, or market is now moving, or a formation of the downtrend is formed totally. Okay, so downtrend is formed totally. So that is example of what? Of reversal. Okay, now let's continue. So we have this total this information here. You can see this picture. You can see prices moving up. This short down movement is not it's called what? A retracement. So we have a low, a high, a lower low, a higher low, we have higher highs. Then we have market forming higher low again. We have a what? Higher high. Market forming higher low again. We have a what? Higher high. So this short down movement, this one is called a what? It's called a retracement. This short movement is called a retracement. Okay, and also I can see the market has changed totally. It does not go up again. It now forms a lower high, lower low. Okay, so this movement also is called what? A reversal. So the difference between a retracement and reversal: retracement is that short movement within a trend. Reversal is a total change of the market directions. Okay, total change of market directions. That is what a reversal is called. So the next topic is what? Support and resistance. The next topic is support and resistance. Now let me ask, does anybody have a question pertaining to trend? Does anybody have questions pertaining to trend? If you know you're enjoying the class, can you drop a fire emoji? Can you drop a fire emoji if you know you're enjoying the class? Can you drop fire emojis? Okay, like keep it coming, keep it coming. See, I love it. Oh, thank you very much, Mr. Bassi. Okay, does the trend apply to CPI news? CPI is a fundamental event. Okay, CPI is a fundamental event, so it does not affect. I mean, that is another case entirely. Okay, CPI is a fundamental event, is another case entirely. Okay, so literally we've understand. I think we understand trend to be what? A movement of direction of a price over a period. So as you can see, market can move from uptrend to what? To downtrend. So all you just need to do, just understand the difference between the trend, the retracement, and what? And the reversal. Okay, the trend, the retracement, and the reversal. Okay, now the second topic we're talking about this night is support and resistance. Is what? Support and resistance. This is just basically, when we are talking about trading, trading involves buying and selling. So support and resistance just shows you or tells you, it's just talking about where we have homes of buyers and homes of sellers. Okay, that's what support and resistance is talking about. Okay, so let's get started. Like I said, trading is not difficult. All you just need to do is just get the right knowledge, and that is what PE Prime Trading Academy is offering. We want you to know the kind of business you are doing and to understand the rudiment or the basics, or if not, the full information you need to know about the business. So we are talking about support and resistance, which is what S and R. So S and R are likened to be what the floors and ceilings in the market. So they are likely to be the what the floors and what ceilings in the market, and that is the price floor and price ceilings in a market. Okay, so support is an area on a chart that price has dropped to but struggled to break below. For example, when we have where you are now, currently, if you are in your house or probably anywhere you are, if you are sitting on a chair, the what is the support in that chair? That's it. Okay, the seat, the chair you are is a what support, because it does not allows you to fall. And if you are standing, the floor is the support. Okay, so support is just an area of a price the price gets to and cannot break below. While resistance is an area the price has risen to but struggle to break above. So just an example here, in this picture, we have the resistance to be here, the resistance to be at the high, and the support to be at the what? At the low. Okay, so the resistance at the high, support at the what? At the low. Okay, so support and resistance is an important part of trading because it can be used to select trading opportunities, where to buy or sell, or where to take profits and where to cut losses. Okay, so it just tells you where to buy and where to sell and where to take profit and when to stop losses. Okay, so why must you trade support and resistance levels? Because these levels are the same levels that banks, large hedge funds, and other market players place at orders. When we are talking about support, we can say that I can say that in summary that support is a what? Is a bias area. Because anywhere price gets to and start going up, this bias, I mean those sentiments, the sentiment that are responsible for taking the price up is the bias. Okay. So once price gets to anywhere in the chart and start going up, it's called a what? That area is a support area. And anywhere price gets to and start falling, it's called a what? A resistance area. So these are areas where we have every almost larger big players in the industry are looking towards, like banks, hedge funds, and other players. They also have their support area and they also have a resistance area. It helps in picking the best entry and take profits and stop loss level for our positions. So because there are levels where market has proven in the past to have interest for buyers or sellers. Meaning at support areas, the numbers of buyers generally exceed the numbers of what? Sellers, which pushes the price up. That's what I said earlier. And at resistance levels, the numbers of sellers are what? Exceed the numbers of buyers, causing the price to go down. So don't forget, anywhere the price gets to and start falling is a resistance, and anywhere the price gets to and start rising up is a what? Is a support. That is one. And secondly, when you are saying support, it means that there are more buyers than sellers. Okay, in a support area, there are more buyers than sellers, and in a resistance area, there are more sellers than buyers. Okay, so these are levels at which a lot of traders are willing to buy or sell the currency. So if a pair is currently downtrending, and we come to a level where there are a lot of buyers in the market, this level is called support. So just like what we said, we identify potential levels of support and resistance by analyzing past price actions such as your highs and lows, round numbers, the figure, trend lines, pivot point, Fibonacci, etc. So these are these are how we recognize support and resistance. We use the data that has happened in the past. So okay, this is high, this is where the market fell earlier. So if the market gets there and falls again, then we know that it is a what? It is a resistance point. Exactly. Yes. Kelly Faith, thank you for that. Support we are going to get there. Support can become resistance, and resistance can also become support. Those happens in trend. Now, price support levels where market has proven in the past to interest buyers. So everybody look at the price. So let me use Naira as an example. If price gets to can I get it plain size? I don't want to use the board anymore because a lot of people are abusing it. Okay, yeah, that's great. Let me explain it here. So So for example, when we have market going up, that is buyers are responsible and market gets to the resistance. Let's say this is around 15 naira, right? People look at the market and like, oh, okay. And it went down to from 15 naira, it went down to 13 naira. So you should know that this is a what retracement. So people look at it that, oh, okay, since the last price people sold off was 15 naira, when you get to 15 naira, I will sell, right? So because people have identified it that markets start coming down at 15 naira. So and goes up at 13 naira. So once price gets to 13 naira, it goes up. Well, so what is happening here? It's telling you that anywhere you see market start falling, so your highs, your high, they are also called your what? Resistance point. Okay, high is also called resistance point. So anywhere market get to I start going down is a resistance. Anywhere market get to I start going up is a what? Support. So we have support, resistance, support, resistance, support, resistance, support, resistance. Okay, so that basically is what the market is doing, support and what and resistance. Okay, so let's continue. So basically resistance is area at the top where we have much sellers and support is where we have buyers. So basically when you look at the chart and you see market start going up, just mark that area as a what will you mark the area as? If you see an area the market start going up, what will you mark the area as? Hello, I'm asking a question. When you see an area and you see anywhere you see support, okay, somebody says support, Chidera says
Support. It's called support. Support.
okay, so there you are correct. Okay. Fabian Asuko said support. Yeah, you're actually correct. So, and anywhere you see price get to and start falling, it's called where? It's called where? Anywhere you see price get to and start falling, it's called where?
Resistance.
That's great, resistance. So we can equally say support is home of buyers, while resistance is home of what? Sellers. Okay, so I hope you understand that. So let's continue. So we can see support level, resistance level. Now, what are the key tools in knowing support and resistance? We can, like I said, we can use our highs and lows, and also we can use your what? Your highs and lows. Then you can also use moving averages, your trend lines. They are also helping you to know support and what? Resistance. Okay. So in a downtrend, we look forward to most support to become what? Resistance, because the market is going down, right? The market is dropping. So we look for market support, right? Market is dropping. Can you see? So this was the last support. It becomes what? Resistance. That means this was the last place buyers bought and that zone was broken. Let me use this as an example. So we have this. So let's say this is the last price that was holding a buyers and the seller just breaks it. Then what will happen? Market will go and retest or retrace it in form of retracement and start going down. So at every downtrend, every support area are the weakest target, because they get broken. Once they get broken, it will become a resistance and market start going down. So that is what a resistance, I mean a support become what? Resistance. So and in an uptrend, resistance always becomes what? Support, because the forces of buyers will break the last resistance and it will start going back up. So you can see the old resistance breaks and becomes what? Support, and price starts going back up. Okay, same thing. Old resistance becomes what? Support, and price start going back up. So in an uptrend, the resistance becomes support, and in downtrend, the support becomes what? Resistance. Okay, I hope I can understand that. So how do we use this support and resistance to trade that will make us profit? The first thing is, identification of your past, right? The identification of, I said, identification of the past event. So when you see a place that market gets to and start going up, you just mark that area, because you mark it as a what? Support. And when market gets to a place and start falling down, you mark it as a what? Resistance. Okay. So support and resistance. So when you mark your area of support and resistance, you wait for directional move into that area. So once market gets to your support and resistance, you wait for a move to that area, then wait for price actions at support and resistance. Okay, so once you wait for price actions, then you pick your entry. So with this that you are doing, you have also what analyzed the market yourself. You also analyze the market yourself. So all you just need to do, mark your support and resistance, allow price to get to there, and place your trade. The recorded classes will be sent to you. Don't worry. We want to compile it and send you the link. Okay. Just trust us. The recorded classes will be sent to you. Okay. So then we take profit and stop loss. So the summary of support and resistance is just quite easy. Your previous lows, I said market makes a higher low, higher highs and lows. So your previous lows is a support, or anywhere price gets to and start going back up is support, and anywhere price gets to and start coming down is a what? The resistance. So your previous highs is a resistance. So support are buyer's home or buyer's area, while resistance are what? Seller's area. So market moves from the buyer zone to the what? To the seller zone. Okay, it moves from the buyer's area down to the seller's area, and from seller's area to the what? To the buyer's area. Okay, so does anybody have questions on support and resistance? Does anybody have questions on support and resistance?
Yes, sir. I have a question about revision.
Okay,
Can you hear me?
I can
Yeah.
hear you.
How can we identify the kind of candle for this support and this candle for the resistance? Like we have red and green candle for support, or red and um, green and red for the resistance. How can we easily identify them? Thank you, sir.
Okay, so I have not gotten to candlesticks. Okay, but the next topic will be the answer. Okay, just stay tuned. I'm not going to candlesticks, but what I just want you to understand is an area when price get to and start going up is called a what? A support, and an area where price get to and start coming down is called a resistance. Okay, so when we get to candlesticks, I'll answer that question. Okay, any other question, please? Okay, so in absence of no questions, we talk about trend, talk about support and resistance. Now let's talk about the candlesticks. So this goes down to the questions the last person asked. Okay, so now this is candlesticks. So if you enjoy the trend, if you enjoy the support and resistance, can you drop a fire emoji before we continue? If you enjoy the trend, you enjoy support and resistance, can you drop a fire emoji before we continue? Okay, keep it coming, keep it coming, keep it coming. Yes, keep it coming. Okay, okay, that's great, that's lovely. Okay, so this evening, the last phase is the what? Candlestick phase, and I'm going to be explaining what candlesticks is. Okay, so you can see the candlesticks, just like what the last person that asked the question said. Um, what's like what the last person that asked the question has asked. He said some look at blue candles, some green candles, some white candles, some yellow candles, and all that. Okay, so now, how do we know the type of candles and what they mean? Okay, so the type of candles and what they mean. So we have two types of candles, but let's talk about the history. So candlestick chart has been developed since the 18th century, in the time of Monisa Homa. So this person is a Japanese rice trader. He's a very, very big the Japanese rice trader is one of the billionaires that are there. So what it does is he uses blocks, right? He uses block to what? To represent candles, to represent the market's movement, to represent the market as are those days. He uses blocks to represent the market. And if there is a good market, probably in January, if the sales is good, it will draw this block like this. It will draw big blocks like this. Then let's say this is January, but if it is good that it made profit or there's a boom, but if it is bad, it will also draw the block. So those are what he was doing in his rice exchange farm. It is called a Dojima exchange. Okay, the Dojima exchange in Osaka in Japan in the 18th century. So this is to tell you that JPYs are also part of the stable economies in the world. That's Japanese yen. Okay, so this man was the one that started. Then Steve Nyson went to read more about candlesticks, but candlesticks originated from the Middle East, that's from the Asian part of the world. So there are two types of candles, and these candlesticks they are being formed or they are being named according to the attacking nature of animals. Okay, according to attack nature of animals. For example, we have the bullish candle, which means which is formed from the attack nature of a bull. So bullish candle is formed from the attacking nature of a bull. If a bull wants to attack, it uses its head to raise the person from down and throw the person up, right? So that's why they call it bullish candle. So when they say something is bullish in the forex market, it's saying that it is what going up, and it is buyers that are responsible for anything bullish candle, bullish sentiment. They are buyers market. Okay, then when we are talking about bearish, if a bear wants to attack, what does it do? It pins its prey down and started tearing the prey up. Okay, so it is gotten from the attack nature of a bearish candle. So when you're hearing the word bearish, it means it is going down. Sellers are the ones responsible for that. Okay, sellers are the ones responsible for. Okay, so sellers are the one responsible for bearish candles. So I've explained the types of candles. So when you're hearing the bullish candle, you should know that it is going up and the buyers are responsible. Now, what is a candlestick? It's just a graphical representation of global market activities as it's being controlled by the forces of demand and supply. So, like I said, supply is what? Sellers, demand is what? Buyers. So then it's basically the graphical representation algorithm of data of the market. So this means that it is just the graphical meaning, graphical interpretation of what is happening in the market. So if it's buyers, probably are having a lot of buyers in the market, and in every time frame, probably 1 minute, if you are trading 1 minute, that candlestick bars is what is telling you what is happening in the market per minute. If it's 10 minutes, it's telling you what is happening in the market every 30 minutes. If it's 1 hour, it's telling you what is happening in the market every 1 hour. Okay, and it's basically the graphical representation of algorithm of the data is used to predict the future direction of the market. Now, in every candlesticks, there are 4 prices that forms a candlesticks. 4 prices forms a candlesticks. Okay, there are 4 prices that forms a candlesticks. The first one is called the highs. Okay, every candlesticks must have a highs, and these formations usually occurs from the for every time frame. Okay, so every candlesticks has a highs. Then we have the lows. Then we have the lows. Then we now have the what? The open and the close. Okay, we are still going to talk about that later. So why use the Japanese candlesticks? There's just three reasons I listed here. Number one, for visual dynamics. You'll be able to see that, okay, this is what is happening. This is the buyers and sellers has more strength. The seller has strength than the buyers have more strength than the seller. We also have precision timing. You earlier, time frame determines the more. On 1 hour time frame, it means that every 1 hour. Okay, so you get information every 1 hour. Okay, so it has 6 technical analysis. So it has 6 technical analysis, so it helps your technical analysis. So just for example, if market gets to a support area, which is probably, let's say, a seller's home, market gets to a seller's area, the next candlestick you see, is it a bullish or a bearish? If market gets to a seller's area, what kind of candlestick are you expecting? Are you expecting a bullish candle or a bearish candle?
Bearish candle.
A bearish candle, because I said earlier that the bears are the ones responsible for what? For sales in the what? In the market. Okay, so now let's continue. So candlestick chart, let's continue. Let's talk about the candlesticks formations. Now, like I said, so high is the highest, is the highest price, and is usually the opening price. Okay, so that is the, so let's say in a 5 minutes, every 5 minutes, these candlesticks must show the highs, the lows, the open, and the close. They must occur. Okay, they must show. So the highest price at that time frame is called the high. Then with the lowest price is called the low. The opening price is the initial price. So this is the first price you receive after every time frame. Okay, that's the first price you see after every time frame. And the close price, this is the last price the market get to in a time frame before ending that session. So like I said, every time frame is similar to every time frame. So that is that on the highs and lows. So now let's talk about the candlestick formations, candlestick patterns. Every trader must know. Okay, the candlestick pattern every traders must know. Okay, so the first one here is hammer. Okay, so there is no science to this. It just forms like an hammer. So what does it mean? Is the shape and the formation is just like an hammer. So when you see it, you know it's an hammer. So what does it mean? It means that sellers are moving down to a support area, and buyers what drives the market up, making it a hammer formation. Okay, making it a hammer formation. So making this type of formations, right? So this level, this formation, so market sellers was moving down and got to a particular price, buyers drove it up. So this pressure, this usually happen in support area, and it usually tells you that yes, there's buyers, that is the buyers are getting stronger than the what? Than the sellers. Okay, it's telling you that buyers are getting stronger than the sellers. So this is an example of a hammer. You can see this is an example of a hammer, right? So market goes down and drives it up. So, and one thing again, I didn't explain. For a candlesticks, there are two components, right? So the highs and the lows, the thin line above all these highs, above this eye is called their wicks. It's called a wick or shadows or rejection. So this means this is an area that the price has gotten to before going back up. Okay, so wick or rejections. Okay, while we have the opening and close. So the open price, this is the initial price. So let's say, and the closing price. Now, how do you determine a bullish candle and a bearish candle? Let me quickly explain that. The body, the distance between the open price and the close price forms the body. Okay, the distance between the opening price and the close price forms the what? Forms the body. I hope you are getting it. The distance between the opening price and the closing price forms the body. right? While the thin line at the top and at the upper end and the lower end of the candle is called the wicks or shadows. Okay, it's called the wicks or shadows. Now, if how to identify a bullish candle is not about the candle, it's not about the color. Okay. Now, if the opening price of a candle is 5 naira. So let's say a price opening at 5 naira and closes at 10 naira. Did we go up or come down? Let's say the opening price of a candle is 5 naira and when closed at 10 naira. Did it go up or come down? Hello?
It goes up.
It goes up. Okay, so going up, so meaning that candle is what? A bullish candle. Okay, so if a candle opens at 5 naira and closes at 10 naira, it means it's a bullish candle. Then if a candle opens at 10 naira and closes at 5 naira, then it's what is going down. Like I said, who are those responsible for pushing the market down?
The sellers.
Yes, the sellers. Okay, so a bearish candle is telling you the presence of sellers. A bullish candle is telling the presence of what? Buyer. So
Buyer.
when candle opens at 5 naira and closes at 10 naira, it's a bullish candle. But when a candle opens at 10 naira and closes at 5 naira, is a what? Is a bearish candle. I hope you are understanding it, right? Is it not simple?
No. We are getting it.
Oh, okay. Is it not simple?
Yeah, simple, sir.
Okay, that's great. So that's quite understandably. Okay. Now, so when we have, like I said, when we have the candlesticks opening at a lower price and closing at a higher price is a bullish candle, and when the candles open at a higher price or close at a lower price is a bearish candle. And I said the thin line on these candles is called rejection, while the distance between the opening price and the closing price is called the what? The body. Okay, it's called the body. Okay. Okay, so now the first one is the hammer. The hammer, like I said, you can see sellers are the one responsible for this market, and they push the price down to this particular price. And what happened? Buyers push. Okay, so the buyers push up, and that is telling you that there are buyers in the market. So we also have another one, the inverted hammer. It's just like the hammer upside down, and when you see them at support area, it's telling you that the buyers are the ones responsible. Okay, so now let's talk about the hammer at a resistance area. The hammer at a resistance area is called hanging man. The hammer at resistance area is called the hanging man. Okay, so it's just telling you that the pressure. Oh, I don't. So, so as I was saying, the presence of um hammer at the resistance, the presence of hammer at resistance will give us more what? It's called a hanging man. Okay, the presence of hammer at resistance is called a hanging man, and the presence of hammer at support is called a what? A hammer. Then we also have shooting star. So it means that the pressure of sellers is coming from the top. Okay, so this is just like an inverted hammer at a resistance point. So it's telling you that the pressures. Now, let me tell you one thing about this thin line. This thin line means what? Pressures of buyers or sellers. Okay, so it's just like buyers pressing or sellers pushing the market down. Okay, so this is called a shooting star. When you see them at the resistance, like I said, don't forget your eyes are resistance. So when you see them at resistance, they are what? They are telling you that sellers are in the market. So we also have engulfing candles. Engulfing candles is when a candle is twice as high as the previous candle. So it just swallows the previous candle up. Okay, it's called an engulfing candle. So, like for example, we have two types of engulfing candle. We have the bullish engulfing. You can see that this new candle is twice as high as the previous candle, right? So this new candle, this one, is twice as high as the previous candle. This is twice as high in size as the previous candle. So it is called a what? Engulfing candles. And engulfing candles also, you can also know that when the body is bigger than the previous one. Okay, when they have bigger bodies than the previous one is called an engulfing candle. So we have the bullish, this usually occurs at the support region, and we also have the bearish engulfing, which also happens at the what? Resistance region. Okay. Okay, so we also have the piercing pattern. This pattern is not literally common, so I won't spend much
Okay,
time on it. We have the
take your
doji.
money. Give that girl say bottle water for me, 200.
So we have the doji. So we have the doji. Doji means indecisions. Okay, doji means indecisions. It means that the market is indecisive and there are pressures from buyers and sellers. Don't forget what I said. The thin line is called wicks, and it signifies the pressures of buyers or sellers. Okay, so doji is just telling you that the pressures from buyers and sellers are equal. They are what? They are the same. Okay, they are equal. So there are four types of doji. There are doji, there's long leg doji, there's dragonfly, there's gravestone. So once you see a doji, it's just telling you that there is high level of range in the market. Okay, so we have three inside up. So this is just formation of two engulfing candles, three inside up. Okay, it's just formation of two engulfing candles, and we have three inside down. So this is a three candlestick formations. The first one, when we have a full engulfing candle, and the other candles, the two candles inside it, they are now, the other candle is now higher, bigger in size, taking two candles from it. So we have three inside up, we also have three inside down. Okay, so we have the evening star and the morning star. The evening star is when we have one engulfing candle, a doji, and another engulfing candle. So for example, for the evening star, it's usually happen at resistance when you have a bias pushes price to a resistance point, and there is a range between buyers and sellers won. So meaning that price was forms another bullish another bearish engulfing candle. So the stars, when we have a bullish engulfing candle, a ranging candle, that is your doji or your hammer, then you now have a bearish engulfing candle. Then the other one too, morning star, when you have a bearish engulfing, a ranging candle, and also what? A bullish engulfing candle. So we have the tweezer top. This is also a bearish reversal pattern, and it's shown that market, there's a there's a strong battle between buyers and sellers, and this is shown with candle with two equal size. Okay, it is called a tweezer top. It's tweezer top is usually found at resistance. Okay, then a tweezer bottom is usually found at a support. It's still the same thing, telling you that the buyers are matching up with the same energies of the sellers. So we have the spinning top. This usually have a small body and long wick, both upper and lower wick. So this is telling you that there's pressures between buyers and sellers. And don't forget, if the wick is coming from the top, it means that the pressure is from the sellers, and the wick is coming from the bottom. It means that the pressure is from the buyer. So we also have Arami. So Arami is also a reversal pattern. When you see Arami, just have it at the back of your mind. The market is about to what? Is about to reverse. Okay. I think I've gotten to the end of the class, right? So let me entertain questions on candlesticks. Then we end the class for today. So any questions on candlesticks? Any questions? Any questions? Okay, good evening, sir. I experienced starting by pressing buy when price is going up, but before long price turns upside down, I mostly Okay, so before the price goes down, I mostly frequently close in losses. And this happens all the time. Same things during the price is going down. How do I feel? So your problem is you do not know how to identify support and resistance. So you need, yeah, okay, Mr. Chidera, questions. You need to know when to buy and when to sell. It is not about candlesticks, it's about the zones, it's about it's just basically when you know your resistance area, you sell that resistance. Okay, because it's a seller's area. And when you know the support area, you buy at support. That's just it. Okay, Mr. Chidera, you have a question. Can you type your questions or you want me to unmute? Okay, so let me unmute.
So,
Okay,
can you hear me, sir?
yes.
So my question is this: when is the best time frame to to use in analyzing market? Like all this trend. What
Well,
time frame do you use personally?
it's good to analyze from higher time frame. So
For what?
probably 4 hours. 4 hours is fine.
4 hours. Okay.
Yes. Is it
All right,
certain
that's
that
cool.
when
And then what?
Mhm.
No, go on.
Go ahead. I want to read your question. Go ahead, please.
Okay. I was gonna ask: is it only the technical analysis we're gonna do? What about fundamental?
That's why I said we are not ending the boot camp today. We are ending it tomorrow. So tomorrow is
Oh, okay.
fundamental analysis.
Okay. Thank you.
Okay, so Mr. Victor, someday is it certain that when you see this kind of pattern, market must move in direction at all times? No, it is not certain. But it depends though. If you follow the trend, candlestick lie, right? Candlestick never lies. Okay, so all you just need to do, just follow the trend. Once you're able to follow the trend, then you can now decide. Okay, so follow the trend. So how do I get to place a trade and be able to hold it till it gets to my target? It depends on you and depends on where your target is. Okay? It depends on where your target is. It depends on if you are a scalper or an intraday trader. Okay? So that is just it. But since you are trading, just learn and hold it. Mr. UK is on just learn and hold it. It's not going to kill you. Okay? It's not going to kill you, just learn and hold it. If it hits take profit, it's fine. If it hits stop loss, it's fine. I do realize that most people that do have panic or that create panic during trades are those people that uses high lot sizes. Okay, so just learn to minimize the lot size and you'll be good. Okay, so any other questions? Okay, so in the absence of no questions, tomorrow we continue by 7 p.m. and tomorrow okay, so okay, you use small lot size, but you still panic. Oh wow. So well, it means that you still need more to read. Okay, you still need more education. Keep joining our classes. We have a funded client group. So we have a funded client group. Okay, so we have a funded client group where we drop signals. And for people that are coming for the first time, we usually do analysis morning and afternoon. So London session and New York session. Okay, so we usually drop links. Okay, usually drop links. So you can reach out to your account manager, reach out to the person that sent you the link for this Zoom. Then you can register so that you can join our online classes every morning when we have analysis. One thing I'll just tell you is thank you, Mr. Bassi. I'm really elated. One thing I can tell you is that you need to just keep trading. Okay, it helps to work on your psychology and don't don't attach money to it yet. Learn it first, knowledge first before any other thing. Okay, knowledge forge for any other thing. So if you know you enjoyed today's class, we are 30 here now. I want to see fire emoji. Can you drop a fire emoji in appreciation to today's class? Yes, thank you. Gift. Okay, Basi has a question you can ask. So drop your fire emoji. Yeah, can you drop? Let's see the fire coming. Keep it coming. Keep it coming. Basi, you can mute yourself. Thank you. Thank you. Okay, thank you very much, everybody. Have a wonderful evening.